Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from US basketball coach John Wooden, who said, "You can make mistakes, but you're not a failure until you start blaming others for those mistakes." To Dale and I, mistakes are an opportunity to learn, and our goal for tonight is that we help you learn in our upfront, no BS approach to all things stock market. We've created another great show for you tonight, so get comfortable as we challenge you to learn more. Our main topic for tonight is about Australian iron ore miners, BHP, RIO and FMG, and how their share price plummeted when iron ore fell. We also answer the question, should you buy or not? Well, stay tuned as Dale and I get into that and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Well, I managed to get that out.
Well, you are. You're just trying on this new low voice, aren't you?
Yeah, it's croak.
I was going to say sexy, but somebody probably post I'm saying I'm a sexist by saying it, so yeah. I'm not saying that.
Good idea. You just did it in a roundabout way.
I just did it in a I did too, didn't I?
That's really
cool.
cheeky.
I know. Hey, guess what I did on Sunday?
What'd you do?
I went to the Melbourne Home Show on Sunday.
Was that interesting?
It was interesting, and a lady waved to me and said, "Hello, Dale, I listen to your podcast all the time, and I'll ring you on Tuesday night. So wherever you are, make sure you get it. I need a phone call." She didn't say her name or anything, but she said she listens to our podcast. So it's
wonderful.
Nice meeting people when you go out, isn't it?
It's lovely.
Glad I wasn't doing anything bad.
Would you do bad? You're a good boy.
I wouldn't. No, I wouldn't. But it's nice meeting
boy.
people. Some people are afraid to come up and say good day, aren't they?
Yeah.
You know, they go, oh, you know, they look at you from across the room. And I go, I wonder if that's Janine and Dale or whatever else. But
yeah, when you see famous people out, it's really interesting.
I don't want to bother them. You know, they're on their time off. Just come and say hello to us if you see us out in the street.
Yeah, I've seen Darren Hinch once before, and footballers. Yeah, that was probably not in Darren Hinch's best days. So.
Well, it was probably one of his best days. No, but I've met a lot of different people, and you have too. When we used to go to Sky Channel and all sorts of other things in Channel 10 and 9 and 7. You meet these people, but we're normal people, aren't we?
That's true.
Yeah. But anyway, let's get on with the show now. Before we get into our first segment for tonight, again, we'll take some live calls on the show. So if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone right now and give us a call. Now, the number you need to dial is 03 9290 9988. That's 03 9290 9988. And as always, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine, I know I'm super keen to chat to people, and I know you're champing at the bit to talk to somebody. So pick up the phone and get dialing now so you can talk to us.
And while we wait for you to call, it is the first Tuesday in the month, and this means that Dale and I will give you our thoughts on the Australian stock market. So let's get into those charts.
Now, on your screen is a chart of the All Ordinaries Index. This is the weekly one, isn't it?
Yes, it is, and I've left it there because I think you were playing around with this, weren't you?
I was yesterday because I was showing people about the Dow, because the Dow on last Friday it went down like 900 points.
Okay.
And I was showing people how
resilient our market is.
How resilient our market is, and how we don't, you know, people sometimes, you'll see on the news, they go, hey, you know, the Dow's gone down, ours is going to tank.
Yep.
But it doesn't always do that, and we quite often are out of sync with the Dow, where it's going up, we're going down, and vice versa.
Sure.
So I was using your little blue line here, which is the Dow, for those who didn't see yesterday's report. And if you didn't see my yesterday's market report, why not? That should be the question we ask, but anyway. So the blue line is the Dow, but I was showing them that, but I'd like to have your thoughts on it because they've heard mine.
Yeah, look, I mean, I'm quite impressed by our market and how well it's held up, and I guess that's a combination of the financials and the miners, because obviously that's the biggest part of our market. I'm not too concerned about the pullback that we're seeing at the moment, although that would increase for me if we saw it break that 7,400 point mark.
So that's around about where my pointer is now, a little bit higher, just around about where that is.
Yeah, if it did break through there, I was a little bit concerned because when I look at the Dow, I just think that looks far more bearish, the fact that it's come all the way back to test that level. It looks a lot more bearish, doesn't it? Yeah, but then that market was just so overblown. If you look at our market, we've only just broken through from the all-time high from the GFC not long ago. So you're just thinking to yourself, well, our market doesn't have that overinflatedness about it.
Yeah, and I think a lot of people are expecting us, if the Dow's weak and the S&P's weak, that our market will completely follow with that. But we've been saying for a while that we thought this year our market would outperform the US market. We've said that because it needs to get back we've shown them graphs before, like we talked about in my book, which
Yeah.
is where we've shown them graphs of how the US market outperforms us, and then we outperform them, and we eventually come back into basically being round about the same over a long period of time. So,
Well, look, we think we're only roughly halfway through
Yeah.
this bigger cycle that's unfolding at the moment anyway. Now, the All Ords could take out that low. It's possible.
so this low you're talking about
It
now?
could,
Because I
but-
know you're allowed to use the mouse. I'm not.
Yeah,
I don't have germs.
Yeah, that's
I don't
fine,
think I
great.
do.
Well, look, I just thought that if the US market takes out its low and it keeps going, it's probably going to register a much steeper decline than
Correct.
the decline on
Yeah,
our
yeah.
market anyway.
I agree with that.
So that's what we were just watching to see now. But I think that some of our stocks are holding up beautifully. at the
I was
moment.
looking at, and this is where I look too. I mean, obviously, looking at this and you go, okay, the Australian market is a bit bearish, down a bit, and the US market is bearish there. But I actually go and look at our top 20, top 50 stocks and look and see what they're doing and how they're reacting, not looking at just this chart alone, because those big stocks will tell you
Yep.
whether there's enough support there for them to keep rising or whether they're going to be weak. And I'm not seeing a lot of weakness in our top stocks. I'm really not. There are little patches of weakness, but I'm not seeing anything that's going to say to me, this thing is going to melt down. I'm not seeing that at all. All I'm seeing at the moment is...
I think there's a bit more trepidation about the fact that we're launching into interest rate increases.
Yeah, but
And people don't really understand how much that's going to be or what that's going to mean to the stock market.
I think it'll make sure the stock market goes up, wouldn't it?
Look, I mean, we've had huge interest rates prior to the GST compared to what we've got now.
I know, we're on an all-time low, so I don't know. The media are just beating these interest rate rises up to the hell, saying if you're under mortgage stress right now and we're in the lowest interest rate environment we've had, then something's wrong.
Yeah.
Because that means you haven't planned very, very
You've
well.
either borrowed too much,
You've borrowed
potentially,
too much, yeah.
or you've actually not. Look, but then the banks have been budgeting anyway for 5 to 7%, 7%
Absolutely.
in the last couple of years anyway.
Well, they have for any new loans coming through.
Yeah.
They're budgeting. So how are we in mortgage stress? Unless you've lost your job and all sorts of other things that have happened, and I understand that, and that's can be unavoidable with what happened with COVID. Some people really did get hurt really hard with COVID economically, so I understand that. But if you're somebody who's been working all the way through COVID and had money, how would you be under mortgage stress?
Do you think that interest rates will go up by more than 1% this year?
I don't think 1%. I think it might be. We'll probably get 0.5%. Might be 3/4. I know there's talk out there of 3% rising over the next period of time. I don't even think we're going to get 3% because the economy, whilst it's okay, and we're in low unemployment, but even then, do you believe that?
I don't believe that.
I don't believe that at all for 1 second. And I think whilst economically we're doing really well from around the world, I still don't think 3%'s there. But I'm not worried about the interest rate rises. I'm not worried about the Australian stock market at all. I don't think that we're going to crash. I'm not seeing signs of all of that. And I think right now we're either moving into our low in June now, which will happen in the next 2 to 4 weeks, or we're going to go back up again fairly shortly, move up to a new high, and then come down into June. That's really what I'm thinking.
Okay.
So I'm not
Great.
really worried. So it's basically don't worry about the market because Janine and Dale aren't.
Oh, okay. That is it for our take on the Australian stock market. Now it's time to get into our first email for the night.
All right, our first email for tonight is from Jeff, who says, "Hi guys, I had called in asking about the Australian potash over a month ago, and you said you wouldn't have bought it because it was going down. Now, it has changed its course now. Can you give a new review on it? If you have time, please. Thanks, Jeff."
Yeah.
Yeah, let's have a look at it. Because roughly, if we show where, I think he said about a month ago, yeah?
I think so.
So let's open it up a little bit. It's not a super liquid stock, but it's okay. But he probably would have been talking somewhere around there, I was saying. And we're saying, well, it hasn't proven it stopped going down. Has it proved it yet?
No, because this week it's actually down, and if it takes out this low, which it may have already done, just looking at that, it's a bit hard to tell because it's only
That's about
registering at 6 cents.
6.6 cents.
Yep, and that's what? Same.
That's exactly the same, so it's right on it.
Once it takes out that low, there's a real possibility it could take out this low, which is the long-term low that
Which
he's
is
been
about
talking about.
5.5 cents.
Yeah. So, I mean, we really need to see it head back above. We won't know anything until it gets above 85 cents. That's the reality of it.
Yeah, and I mean, it could go sideways for a little while too through here.
It
You
could
just don't
too.
know, and you could. But I mean, the one thing positive for it at the moment is you've got slightly more volume coming through than what you were in this downward move. So that is a positive. But really, it has broken up for those several weeks, and it's risen from that sort of 6 cents to 9 cents. So it's like we're talking a huge move here on this stock. if I use my little tool here, you can see there's a massive move here. So that's why people are interested, and obviously why Jeff's still interested in it. But, you know, I wouldn't be getting into the stock right now because I don't think it's stopped.
Yep.
It may not have stopped falling, but it may not be rising.
I mean, if it does get going, it could head back up to the 10-cent mark and possibly up to about 13 cents.
Yeah, it could. So there's plenty of time to profit if once it proves it's going up. But at the moment, I think I just sit back and wait. But we do have a caller on the line, Janine. So our first caller from the night, and I believe it's Toby. Is it Toby there?
Yeah, that's me.
Well, welcome to the show, Toby. Where are you from?
I'm from New South Wales, Canberra.
Ah, Canberra. I love Canberra. I've got lots of friends there, and my in-laws live there, so I'm there quite regularly. You've got a question for us tonight?
Yeah, I do. First of all, I've been a fan for a while, and I enjoy watching the show a lot.
Thank you.
And I just was after your professional analysis on and thoughts on CBA as a medium to long-term stock hold option.
Yep.
As I've been watching them for a couple months now, and they've just been bouncing from, you know, that 100 range to 110.
Yep. Do you own that stock at the moment?
No, I don't. I've been meaning to hold it or get into it for a while.
Okay, so your medium sort of long-term outlook, that's what you said. You're looking to get into CBA. You're just wondering where it might be heading.
Yes.
Easy. So Janine's brought it up, and she'll give you her expert opinion. But thanks for calling in the show.
Look, I mean, you really like CBA, don't you?
I do
as a stock?
like CBA, but it has been bouncing around a lot the last few months.
Yeah, and look, $100 is an area where it really wants to come back to, I think, in the short term.
Yeah.
So looking at what it's done in the last 2 weeks, we could see CBA come back around that area just to find support, and that's nothing out of the ordinary for this stock, is it?
It doesn't look too dissimilar to the All Ordinaries Index, does it, at the top there?
That's right.
Because you've got those, you know, that top there, another top there, and it's moved up, still can't break through, but it's a little bit of weakness the last 2 weeks. But yeah, so what's the direction of this stock at the moment?
Sideways, really.
Sideways at the moment, but it will break. But what I'm seeing here is that it's not going down too much, is it?
No, it's really been stable.
So that would says to me that if some good news come out or something happened, it would just go straight up.
Yep,
And to me, that's what I'm looking at the moment in terms of once the economy settles, and we may see the interest rate rise. You know, the banks always make money out of interest rate rises, don't they?
Oh, they do, don't they?
So we might see this thing take off, but right now, probably a little bit too early. But thank you for the call, Toby.
Great question, great stock. Before I get into the next question, look, do we have something further on this one? Or
no, I'm fine. I'm finished on it.
If you are listening to this YouTube live stream as a podcast, then we would love your help. And that means giving us a 5-star rating and writing a nice review. Now let's share the next question, which is from Will. Hi Dale and Janine and team, I'd like to ask about Mount Gibson Iron. I bought this stock at 55 cents in March on the basis that the company would recover after some massive falls in 2021, with iron ore looking bullish. I'd just like a technical view on this share. Perhaps there is an uptrend line now forming. That would be greatly appreciated. Thanks, Will. Good question, an interesting stock. I really like this one from a long-term perspective. Have a look at that. So you look at the formation, and for people who understand pattern formation, this stock is just looking like, to me, it looks like it's on a long-term rise. And what can often happen with these smaller shares that start these longer-term rises is you can often see that they get taken over. And this can be really frustrating, Dale, can't it? From a technical analyst point of view, when you see a great stock that potentially may have bottomed out and it's starting this new run, and the board, and you're thinking, what is the board doing? You know, we can see that this stock is on a long-term run potentially. Once it gets above $1, well, look, the sky's the limit on it then.
It is, but I've just noticed your line there is at 85 cents instead of 55 cents because that's where he bought it, it looks like.
No, I think it's got away from me there.
It's got away from it, didn't it? I think you not only got a croaky voice, but your pointer doesn't really work. So let's go put that down there so we can see that he's actually, I'm thinking he's in profit if it's up around that 70 cents. So what's going on here? So he is in profit. He probably would have been a little bit nervous last week when that happened, but I like it. Good point. Now, trend line. You're on the track, mate. I think you also wouldn't confirm a trend line there, but there is a trend there. It's an uptrend, and I think it won't be too long before there's an uptrend line on that stock. So I do really, really like that.
Yep. Okay,
Anything else
beautiful.
you want to say?
No, I think it looks
You
good.
go say, well done. Okay, well, we now have an email from Michelle who says, hi Dale, hope you're well. I am, but Janine's probably not at the moment. She's a bit croaky. She goes, I've enjoyed watching your latest broadcast recording regarding A2 milk and other stocks with similar patterns, which I think may apply to AEF. I bought this stock on the way down earlier this year thinking it was at a discount and that the bottom was near. There was a slight increase early April to $7.41. However, the stock price kept falling and today was the worst day, down to $5.70. I could say that it was due to the high March 22 CPI. Hence, I would like to seek your view on the direction. Below are some of the analysis I've gathered. Now, this is a long email, but I wanted to leave all this in about what she's actually done. Now, the first thing she says, the fund is making profits, though it has decreased according to the half-year results. Number two, she says the fund shows positive inflow, but still less than previous quarters. Number three, RSI is showing slowdown in the selling action. And number four, the MACD is coming up from 5-year low. Thanks so much for your help, and I hope to hear from you soon. Best regards, Michelle. A great email.
Great to see a lady.
Great to see a lady.
Sending an email. Good on you. Well
She's done a lot of analysis
Was it
there.
Michelle?
Michelle,
Or-
correct.
Yep.
But that's why I didn't edit some of that stuff out, because sometimes, obviously, the viewers know we have to edit emails to make it short, but to stick to the real question there. So
Yep.
what are you talking about now? I think she's bought it way too early. She's trying to buy it at a discount, but she was buying a falling knife because she didn't wait for it to go up. I think that's part of it.
Well, it really depends on when she bought it, because if she's bought it, she said early 2022. So let's just have a look. Okay, let's expand that out. So early 2022 could be anywhere, couldn't it, really, across here?
Yeah.
So it was actually going up nicely
It was there, correct, yeah.
up until April, which is not long, it's not far away. We're on the daily chart here. Okay, so did you realise that?
I didn't realise we're on a daily chart. There
Yep.
you go, look at that.
So just to have a better look now,
Why
I
were
tricked
we
you
on a daily chart?
because I planned it.
You tried to trick me.
Because you were tricking everybody, the viewers that were watching the other week, by showing them a daily chart and then moving it, which was an awesome exercise because everybody loved it.
I know
Now, do you
people
think
did.
this is an awesome exercise?
I think there's a brilliant exercise. So basically, you're trying to trick me.
So there you go.
So she's bought a stock that hadn't proved it stopped falling because she
Yeah.
wanted to get in
Yep.
at a discount, and when you try and do that, you generally get a bigger discount
Yes.
by losing a little bit more. But right now, this looks like it's going down to me.
It does. I mean, it's fallen 60% of its value from its all-time high, which means it could go further. But the challenge right now, I think that if it doesn't turn around in the next week or two, that's the risk, that it could keep falling.
And the fundamentals she mentioned, they're not super positive, that she mentioned. And she also mentioned the RSI and the MACD. And
Yep.
to me, they're both tools that we don't use. We never use those because
Oh, look, in the
they're just so
early days when I
inconsistent.
first started looking at the stock market, everybody was talking about those, and I just, having science background and then thinking about how that works, it just could do your head in. Don't you think?
Oh, they do, and they often give you false signals. And this is really where she's reading these. They're
Look,
giving you
any
false signals right now.
technical analysis can give you, not a false signal, but can give you a signal that then the stock turns around and goes the other way.
But I
That's
would say
just
to
the
you
reality.
that every single viewer that's watching
But
this show right
it's
now,
the frequency with which those things do that.
they're correct, they do it. But every single viewer that's watching this show right now, looking at that weekly chart, goes, I'm guaranteed if I said if that's going up or down, they'd all go, it's going down. And then they would know, okay, don't go into it.
That's a
stuff
fairly
going
simple
up.
way of looking
it's
at it, isn't
really, really simple. So I don't need an RSI and a MACD to tell me that.
Yeah, but in order to help Michelle, I mean, she now knows that it's still going down, and that's the tough thing, that she's got to make that decision as to where she's going to
Absolutely.
draw the line in the sand.
All right, Janine, next email.
All right, brave girl. Now we've got Michael. Now we have a question from Michael. And hi, Dale and Janine. Thank you for the videos. Are very helpful, especially for a new novice like myself. I have read both your books and watched your show all the time. Please, can you do a TA on AGL Energy? Looks to be uptrending now. I'm not in yet, but I'm thinking it is a good opportunity. Best regards, Michael. Thank you very much for your question, Michael. Look, we seem to get AGL every week, don't we?
We do. There's I only had it yesterday, actually.
So
on
can
the
I
market
just say
report.
refer to last week?
They just say refer to Dale's report yesterday because I looked at it. I like it. I think it's great. I don't think you got an issue with it. If you're not in it, then look for a
I
public
had a
entry.
discussion on it about the fact that it's going through a demerger soon.
Yep.
June
That's
was
the
the
issue.
date.
Yes.
And then the fact that there's been 2 offers on the table and it's surpassed those in price.
Yep.
And there's no other offer that I know of at this point. So that's why for us anyway, I just wouldn't look at it. But for an individual, you might be more willing to take a bit of risk.
Look at it, yeah. Because I mean, it does look good at the moment, so I understand why people
you don't
bring
want
it
to have
up.
2 shares. You don't know what the size of the companies are going to be or how they're going to trade
Isn't that the
at this
gamble?
stage. But I'd rather look for something cleaner, wouldn't you?
Well, look, some people wouldn't mind having 2 shares. You know, that's the thing is, and then they get both of them rising up. So that's what people are looking at, I think. So, but it does look good at the moment. I do like the share. But hey,
Okay,
I'll go with you. Whatever you say, Janine,
No,
I'll believe
you have your own opinion.
Well, Janine, I think it's time we actually do get into our topic for tonight, where we discuss the Australian iron ore miners and how they plummeted. Now, we'll also then answer the question, should you buy BHP, FMG or RIO now?
No doubt, most if not everyone watching will have heard about China's decision to reinforce COVID lockdowns and the effect this is having on the Chinese people. Now, being in the most locked down city in the world and having experienced repeated lockdowns ourselves over 2 years, the memory of the experience is still very fresh in our minds. That said, I'm sure that we can really empathise with the people in China who are experiencing this again. Whilst we sympathise with the Chinese people, how this lockdown is affecting the rest of the world is something we need to discuss, isn't it, Dale?
I totally agree with you, but we need to understand, like it or not, that we are in a global economy. So when lockdowns are enforced in a country, supply chains are disrupted. Now, when you're talking about big manufacturing companies or countries like China being in lockdown, this stops or greatly reduces production. And not just in products like iPhones and televisions, the normal ones we see, but for steel.
Yep, and Australia's resources are used widely in the production of many goods, and so when supply chains are disrupted, it increases the volatility in commodities and the related stocks here in Australia. So I'm sure everyone will appreciate how timely it is that we have a good look at Australia's big 3 iron ore miners to understand how the current lockdowns in China are impacting their shares.
No, I know you're right on that one, Janine. I definitely know you're right on that one. But we do need to look at all 3. But I'm sure they also want us to share our thoughts on our preferred stock, or indeed where the BHP, RIO and FMG are stocks that they should be looking to buy right now.
Of course, they all know that I'll give them my thoughts on which stock, and you better be ready because I want to hear which one of the 3 that you prefer. Before we get into that, I'd like to talk about something that really annoys me, and no, it's not you, Dale. Although just kidding this time. Okay, maybe I'll save that for next time. You may have seen headlines recently containing words about a bloodbath on the ASX. It's no wonder that we see so many people become uncertain and even frightened about the current situation in China and perhaps thinking about the negative impact this may have on the Australian market and their favourite stocks. There was no bloodbath, and Dale, a meltdown is much more severe than this. And I know we have said many times on the show that people would be wise to ignore the noise of mainstream media, as it's just not helpful when you're looking to profit from the market.
I totally agree with you, and I'd hate to say that one as well too. But Janine, it's hard to ignore it when we are bombarded by that news each and every day. Now, one thing that's abundantly clear to me is that this is the time to consider carefully the decisions you make. But most importantly, when the big stocks fall, the market will be more volatile and portfolios will fall for a time before they recover. So I recommend everyone watching to be ready to pounce when the volatility settles. Now, the pendulum always swings back the other way, and when it does, the opportunities to profit will be significant. So it's really important to be patient and wait for those opportunities rather than jump in early. Now, I know, Janine, you have some statistics around iron ore to share with everybody.
You know me, I've always got statistics, and what is clear is that according to Reuters, China's imports of iron ore reached a staggering 1.12 billion tonnes last year and 1.17 billion tonnes in 2020, though the numbers seem to vary depending on where you look. For example, now we've got some different figures here. The Observatory of Economic Complexity show the number was 99 billion for 2020, and around 64% comes from Australia, where Statistica reported that in 2020, of all seaborne iron ore imported to China, around $70 billion of iron ore comes from Australia. So there's the tonnes and the dollars, and these are big numbers according to an article by the ABC that iron ore accounts for around 20% of our exports, and according to the media release by the Minister for Resources, Keith Pitt, iron ore is forecast to earn Australia around $700 billion from 2020 to around 2026. So I'm sure you understand the importance of this commodity to our economy and our stock market. Therefore, it's important to follow these big miners.
Now, these are pretty staggering numbers, Janine, and I'm not really sure everyone fully appreciate how even a small change can have a large effect on our economy and our miners. Now, given the numbers you've just heard, you can understand how when contracts are negotiated, even just a few cents of fluctuation in the price of iron ore can have a significant impact on the money paid to our miners. Now, even small movements in the Australian dollar versus the US currency will also affect our miners.
Now, Dale, there's something else I wanted to talk to you about before we get into the charts.
Am I in trouble?
No. The recent increase in volatility in our miners was nothing compared to extremes in volatility seen when COVID was first made public in 2020. We all know now that this was caused by the massive levels of shorting activity that was allowed to occur on our market. What really sent a tremor through the market recently was that the price of iron ore fell by around 10% in a day. To understand the impact on the stocks around that time and over 5 days, we saw Australian iron ore stocks fall by at least this amount. And in a second, I will bring up the charts and we'll have a look at all three big miners. But just before I do, let's consider how they moved. All three formed a peak in price on the 19th of April, which was just prior to the fall I just mentioned on iron ore. From there, in around 5 days, FMG fell by around 11%. RIO dropped 13%, BHP fell the most, with the sell-off wiping 16% from its price. Now here is where I got really excited. What you will find really interesting is how FMG has recovered in less time than it fell, while RIO and BHP seem much slower to recover and are still well down from the peak I mentioned.
Okay, so Janine, it's time we take a look at the charts of BHP, FMG and RIO to see what occurred and whether now is the time to buy.
Yeah. Now, I have a chart of the All Odds there first because I wanted to reflect on what we were talking about before. While we see all this volatility going on in the market, our market really hasn't moved much. When you look at it in the scheme of things, it's still part of a sideways move. So until we have that pullback that we just were talking about before, and we know that's going to be driven by stocks like BHP, which is on the screen now. FMG, RIO, if it does happen, and the banks have got to come back as well for that sort of move.
So if the banks and the miners are going down, the market goes down. If the banks and the miners are going up, the market goes up. If the banks are going down, the miners are going up, the market's stagnant, and
it's
vice
sideways,
versa.
basically. Pretty much. So looking at what BHP has done, now what I find interesting here is how BHP has a number of peaks, okay, that historically there was this important one that occurred in 2008. We've got this second one in 2011. Now, BHP is only just trading above where it was in the GFC, which is in line with what we were talking about with our market. And we have seen huge levels of volatility, and I did say in the past that I felt that our market was doing similar things to what was happening in the 90s or early 2000s, right? So where we'd seen a lot of sideways activity. I'm just going to shrink up the chart so we can get a better picture of what happened back then. So we can see that there were lots of tops around here before the market had a big decline. Now, in theory, we've seen the COVID pullback that occurred, and we've seen a rise out of that. Now, there was a reasonable fall in March 2000. There was a lot of volatility through this period in the early part of the decade going forward, and we're seeing a lot of volatility again. If I can just get this going. So in the last few years, COVID or not, regardless of what it is, we're just seeing
a lot of volatility.
Huge volatility. But out of this volatility eventually comes a big run.
Yes.
So we've been saying for ages that we think that the Australian market is likely to overtake the US market at some point in terms of growth. And the commodities are the thing that our market is heavy in and that will drive this. And we know we're only when you look at these peaks, you think, gee, we must be in the infancy of this longer term run.
We look at that too. I mean, obviously we're talking about iron ore here, but there are other metals, things in like copper, lithium, and all sorts of other things we do as well, which are in demand for batteries and all sorts of other things. But you would think we are in the start of a long-term trend, and with China at the moment being basically locked down and slowed down, and the rest of the world having been locked down, perpetually locked down over the last few years, now the brakes are coming off, so to speak. When China comes out of this, you'd think there's going to be growth because their CPI is so low, it's not funny. Like they don't have CPI like the US and Australia does, and even ours is at the high end of where we've been. But when it gets when something gets to where the top is, it's the only way is what?
Down. Look,
down.
So the challenging thing is though that because there's so much doom and gloom going on, that what happens is we get an elastic band effect.
Yeah.
So, we've seen supply chains being strained.
Yes.
We've seen perceptions, which is one of the most important things. It's people's perceptions that are going to drive price as well. So we're seeing BHP at the moment sideways for the last 3 months, really, and looking like it should come back. I'd ideally like to see. Well, I'd like it to see it come back because if it doesn't come back and it takes off, it's going to make a peak once it gets through that high, and then it will come back.
You're saying it's basically it'll shoot off.
That's the problem. So you'd much rather be in a stock that's actually had a proper pullback and then goes up than to actually try and buy before that pullback's occurred.
I think it's important to explain that just a little bit, because obviously if it takes off, what you're saying, if it takes off, it'll be a short, fast run.
You can still buy, and I could be wrong, it could keep going when it goes through that high, but more than likely what tends to happen is once the stock goes through that, and that's a significant point, that it will not too long past that point.
But what you're looking for is if it pulls back now, then the move up will be much more sustainable and steady.
That's what I think,
And that's really what we'd prefer, is a not much more. And most investors would prefer that, a nice long-term sustainable mover, rather than a spike up and a spike down, which continues the volatility.
But what's confused me really right now is FMG, because it's that. Now I'll go to the daily chart.
You're trying to confuse me too, because you've had a daily chart on BHP and you've had a daily chart on FMG. You're trying to get me again.
Hang on.
I'm onto you.
Polish those glasses.
I'm onto you.
Polish those glasses for a minute.
Okay.
See that word?
That says monthly, but we had a daily there.
Well, just ignore that. Don't get caught up in the noise. That's what you tell everybody, remember?
Okay. No, I'm just waiting for you to trick me again.
Yeah. So you can see with the interesting thing with FMG is that it looks strong.
It does.
Looks
very strong.
So, I mean, and then RIO, when we look at RIO, I've done that to you again.
Again, a daily chart.
RIO looks the weakest of all of them at the moment, because it's well below that GFC peak.
Yes.
And it is trading sideways as well, but if it goes through that, it might be a really good move. Again, I'd still like to see it come back a little bit further, but it may not.
Now, I know this is probably a big question. Is there a fundamental reason why RIO looks weaker than the other reason? Because obviously it's got higher grade iron ore and all those things that are demand.
Yeah, I guess diversification to an extent has got to have an impact on it.
People just prefer BHP to RIO.
But then, FMG's gone up. It's just in the short term, it's actually moved up really strongly if I just have a look at that. So, we saw a reversal last week and it's just been holding up, although today obviously it's down, but it looks like it's holding. That really surprised us, didn't it? The fact that it just pulled back so strongly and then turned around and went back up again.
If you look at these charts, and I'm just... Like I said, when we looked at CBA, it looked similar to the All Ordinaries Index. These charts don't look too dissimilar.
Yeah.
And that's really what you were saying before, with the miners and the banks, that's the All Ordinaries Index.
Yeah, because the challenge is that we know that there's always a possibility these stocks could get sold off.
Yes.
And could get sold off quickly. And if FMG went below that low, to me, that's all over.
It's all over, it'll go down quite fast.
That means our market and everything's going down. For BHP, if we look at the weekly chart of BHP, it could come back below this low in February 22, and I'd rather it do that, but at the moment it doesn't look like it's going to. It looks like it's just going to hang around here for now. But I'd much prefer to see it break down now. Otherwise, it's got a higher chance of breaking up and then back. And
now, can we just expand that up a little bit just so people can see the bars a little bit? No, the other way. That's compressing it.
Yeah.
It's okay.
Okay.
It's okay. But if we have a look at last week's bar, and this is what I was getting at before when we were talking about the All Ordinaries Index. If you look at last week's bar, it gapped right down and closed on its high.
Yep.
So if this market was going to fall away, and this is BHP, if this market was going to continue to fall away,
It would just stop.
It
take
would have
a
done the
breather.
opposite.
Well, look what it did here when the sell-off happened in 21. It stopped. They repositioned themselves in the shorts because they were probably thinking they had to cover themselves, but then it didn't bounce. So then the short sellers have come back in and then people have sold. So, and I guess our comment about those apps is the apps are probably helping them achieve their end goal.
Most probably too, yeah.
Yeah. So, at the moment, it's just sideways, and that's all you can say at the moment. But there is huge potential, but at the same time, because it is so sideways, there is that risk of the downside. Now, I've marked a few things on the chart which I wanted to talk about. So we've got that dashed line there,
yes,
which is obviously resistance from that all-time high for RIO. For FMG, I'm just going to go back to the monthly chart again. That's actually providing support for it, which is the opposite to the other two. So BHP, if we look at it, and I've hidden the line, so I'm going to have to do a quick draw McGraw. I think I've broken my thunder already. I've just actually revealed something.
You have.
I've flashed. Okay, so there we go. You can see there we've got support. Not as good as FMG, but it's not under the line, which is interesting. So now if we look at the upside potential for these stocks when eventually they get going, I'm expecting that BHP will eventually head into that zone between $60 and $70.
I would think so too, most definitely, yeah.
But you can see why I want to see that pullback happen, can't you?
It's much more predictable. If it pulls back now a little bit, then it's much more predictable to getting up to those levels.
Yeah, I'm not saying I wouldn't look for an entry, anyway, but I'm just saying that right now we're just seeing what's the better option. So with FMG, again, I mean, for it to take out that low, it'd have to be a complete disaster on our market.
Yeah.
I mean, something would have to have happened around the world that's far worse than COVID. It would have to be a financial crisis or something because the big ones, when they pull back...
Well, anything's possible on the market. I mean, I've been saying for weeks in my market reports to expect the unexpected, and we sort of got that last week.
Yeah.
But that's like not unexpected. That's sort of like, trying to find a hen's tooth, that one.
Yeah, I mean, ideally I'd like to see FMG come back just a bit further, maybe $17, $18 and test that bottom there and then turn around and go back up again. That would be a true test of whether that's likely to hold, but it looks good at the moment and there's some upside to the all-time high. So looking ahead, the zone that I've got for FMG is somewhere between $28 and $31.
Yep. So not as high as what BHP
goes up.
Not as big a percentage as BHP.
Oh, it's still
not too bad.
It's good. It's a real. If we just have a quick look, I don't know where it's up to the individual where they decide to purchase.
Okay, it's still reasonable, isn't it?
Yeah, and if we're talking about BHP, it's here at the moment, but we're sort of similar sort of thing. But I'd be expecting it could get to that level. If it does turn around and go back up, that's around 24.5.
Okay.
And RIO, to me, I just think that these stocks, in theory, when you look at this, have got such a long way to go. And then we've got 150, 180 as a potential if it does get going. But, I just really want to see them pad out that bottom before they take off.
Yeah, I think if these go up and the banks go up, then the rest of the market will go with them too. I think we'll start seeing a lot more positivity on our marketplace. But those three stocks and the big four banks are really sort of critical in their direction over the next few weeks to determine whether we go into our low earlier.
Yeah, I mean, if RIO fell away and came back to test that level, I'd just have to readjust the whole view on where things are going. But I'm quietly optimistic about where things are going, and often all of this talk in the media can, stocks still go up in times of war. That's the reality of it.
They do.
So let's just wait and see. But what's your pick?
BHP.
You're picking BHP, so we come back to BHP. Why BHP?
Because you asked me to pick. It's simple. And it's the first letter.
Right.
BHP.
Oh,
it's alphabetical.
So really what you're saying is you'd pick any?
No, I like BHP because it's above those highs from back in in sort of last decade. And it hasn't really wanted to break much below that. So I think there's some really great support there, and I think there's really good upside, and it's really early in its trend, I think.
Well, see, I wanted to pick BHP as well, but I just
want to agree with me.
I don't want to agree with him, do I? So look, I'm liking FMG, but we could see some more consolidation in the short term anyway.
Okay. I like all of them, but as I said, I think the critical thing is that with our market right now, we've got to look at the direction of the banks and these three stocks to determine what's going to happen in the next 2 months.
Exactly.
And if they all take off, then our market will move up to those 8,000
And
point
it is
mark.
fluid.
And it's fluid, but as I said, anything's possible on our market at the
That's
moment.
right.
But I do like it. So thanks for doing that on BHP, RIO and FMG and giving your thoughts on that and the iron ore and everything else. But again, if people read between the lines, we're not talking doom and gloom here, are we? We're just not talking about it. And whilst the media put out all these fancy titles and all these inflammatory type of things, like the market's melting down, look, as we said a little bit ago, just disregard all that sort of, and just focus on what's actually really, really happening. But I think that's it for our topic tonight now, Janine, I think, isn't it? Now, before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get dialing. The number you need to call is 0392909988. That's 0392909988. So get dialing now. I know Janine and I are really super keen to chat with you.
While you call us, we will get into answering the next question. So call now.
Moving on, we have a question from Robert who says, "Hey Dale, I wanted to get your thoughts on Aussie broadband. I brought in at $2.50 and still currently holding as a long-term investment. Would love to hear your thoughts, Robert." So you want to bring up Aussie broadband?
I have already got it.
Oh, well done. You're in front of me.
All right, so you can see there on the chart of ABB
Holy
that
moly.
we have seen a huge sell-off this week. Not what you want to see if you're holding the stock, that's for sure. However, we're talking about prices down at $2.50, which is really...
So he's done well.
He's done well anyway. But, it's really annoying, isn't it, when you hold a stock and it's been trending beautifully, looks like it could go on forever, and all of a sudden you get this nonsense going on. So, look, let's just have a bit of a look on the daily chart to see what's actually happened. So we can see there that the first day that the fall happened was actually yesterday. So let's just register what that percentage drop was from the close the prior day to the close that day, 28% in a day.
That's a massive, massive move.
Now, the interesting thing is that it gapped up
Yes.
yet today, which may have been an opportunity
And then
to
close
get.
low.
And then close low. So you go figure, that's just really odd, isn't it?
That is super, super. And look at the volume for the last 2 days. Super high there. It's just...
So look, it's just disappointing when you see that sort of thing. But I guess the problem too is the fact that this low here is that's 396, and the low of this bar is 394. So it's actually taken out that low.
It's taken it out, yeah.
It could do the rubber band thing and bounce back, but in this sort of climate, we could see smaller type stocks get sold off more heavily. So that's the
Well, he's
risk.
on a long-term investment. That's what he's talking about. Now, he's done well. He's still
a
doing
long-term
well.
investment that's taken out a trough on the monthly.
Yeah, I know. So what he needs to be considering is he going to continue to hold it long-term right now, even though it's falling, has been falling heavily, or is it likely to rebound? Is it just coming back to momentum, normal momentum? Because we do talk about it, how stocks do get away from their momentum. So if you're looking at, let's expand up the weekly chart just briefly, so you can see whether it's coming back to that sort of line or not. Where's my trend line? Just quickly, I'll just throw that on there, but you can see it could be just coming back to its sort of normal momentum. But I'd be really worried about it if I were you, and just making sure I've got an exit strategy on it, because you don't want to erode all your profits, do you?
No, and the problem is it could fall to $3.
And it could fall to $3. Yeah, correct. Totally agree.
All right, it looks like we have another caller on the line, and it's Jeff. Hello, Jeff. How are you this evening?
I'm good. How are you?
Good, thank you. And where are you calling from, please?
Calling from Brisbane, the next
Fantastic.
Olympic city.
Oh, geez, you're proud, aren't you?
Here we are. We're very proud up here.
Yeah. And you've got a stock for us tonight. What is that stock and what's your
I
question?
do. It's Whitehaven Coal. Now, it's a stock I've been watching for quite some time. I bought into it in July last year at $2, and it's done pretty well. Though I use a trailing stop, and I had a trailing stop at 10%, and I got stopped out of it in October. So I bought back in December, and I've increased my trailing stop to 15%. sort of just wondering if it's getting to that point. It's been a bit flaky in the last few weeks, and just wondering whether you think we're running out or has the trend still got some room to go?
So I gather you're trading more short term, are you?
Well, it's a resource stock. I tend to trade resource short to medium term.
Yeah.
So, I bought this one in July, so we're nearly a year, so I sort of put that into the medium term.
Yep, that's fine. All right, Jeff, look, interesting stock, and thanks for bringing Whitehaven Coal up tonight. We'll get into the chart for you.
So I put 2 marks on the chart. One where he first bought it in July last year at that $2, and then roughly those lows there in December last year.
Now, we also talked about this one recently.
We did.
I distinctly remember it because it's just the pattern's beautiful, the way that it's unfolded. And look, China has just made an announcement that they're removing all tariffs on coal.
Yeah, and we can't dig enough coal out of the ground at the moment to send it offshore. We just can't.
Yeah. So, in terms of your thoughts on that, what are you thinking then?
I love it. I think I'd be staying with this stock at the moment. Yeah, it's been quite vertical. I mean, the angle is there quite steep, isn't it? So you'd be worried a little bit about that. But even with the volatility we've seen the last 2 weeks, it gapped down and traded right up again. So that's a sure sign of a really, really strong stock. But it does trend on those angles. Look at the angle through here on the monthly chart. And if I just use my...
Was it 2 weeks ago when we spoke about this one?
A couple of weeks ago.
Yeah.
But you see the angle is pretty strong. And if I drag that over, you can see it's pretty much the same angle. So it runs on those angles quite a long time period. So look, I would just be watching this and going, looking for his weakness, but I don't see it right there at the moment, do you?
There's no weakness right there at the moment, but I'd be really cautious about it right now, given it's just had, so many consecutive weeks straight up.
Yeah, so just have some sort of exit strategy, whatever that is, but if you're more medium
I thought it was interesting that he had a 10% stop and then he changed it to a 15. To me, that was something
that's interesting,
really interesting to bring up. So why would you do that?
I don't know, maybe you can ring Jeff and ask him.
Yeah, maybe
have a beer with him or a glass of wine.
What I'm thinking about is maybe the win, like if he's had a win previously on this, if he was trading it before, maybe he's just thinking he needs to give it more room to move because he's getting to know the stock a bit. I don't know.
Well, I would probably think that's probably the idea, is giving a little bit more room to move, but anyway. But thank you very much for that on Whitehaven Coal. Now, we do have another caller on the line. I believe we have Jacob on the line.
Yes, we do, yep.
Welcome, Jacob, to the show. Where are you from, mate?
I'm from the New South Wales South Coast.
Oh, geez, a bad place to be, isn't it, during the winter time here in Melbourne? I'd love to be up there with you. You've got a question for us, mate?
Yeah, I'm asking about Wesfarmers. Now, it's pulled. It looks like it's pulled back nicely, and I want to buy in at about the $49.90, around that $50 mark.
Yeah.
I want to start to sort of head back up again. I'm just wondering what you sort of think of the stock, if it's if it's pulled back too hard, or if it's sort of setting up nicely.
What's important about the $49.50 mark?
Because it's coming up above a prior swing, so it looks like it's going to come back up, and if it swings back up above that prior peak, it looks like it could set up nicely.
Okay. Short, medium, long term?
Oh, look, probably medium to longer term, over sort of that 1 or 2 years, if it trends up, because it can trend nicely, Wesfarmers.
Oh, yeah, brilliant. Cool.
Yeah.
Fantastic. Thanks very much, Jacob. Janine will get it up right now and get into it for you. Thanks for calling.
Okay, another big stock choice, which is nice to see out there, Jacob. So let's just have a look at the chart there. You can see that it's really just sideways at the moment.
It is just sideways.
And I think you picked up on the $49 mark because it's really too low a price to know whether it's going up or not at $49, really, isn't it?
Well, it is at the moment. I mean, obviously, he's talking about $49.50, so if you expand that up and you can see, let me do the horizontal line and put that on at 49. Where's 49.50? And a little bit further, roughly around there. So he's saying if it gets above that, then he's into it. It's probably a bit early for me, but hey, I'm not discounting what he's talking about there. But it does trend well. It's a great looking stock.
It's a great stock. This is one that you should have on your watch list. But look, it does trend well,
worries me, though.
But its history tells you that at times, and I think we've talked about this on the show before, it can go sideways for years.
Yep.
For many years, and this is the challenge with it. So that's all you need to bear in mind, though.
Yeah, I would probably
give
it a little bit more room for my entry, and because at the end of the day, it's like if you get into it, there's only a few percent between roughly there and there. There's 4 or 5%. So which way would you rather enter earlier or later and know it's going up? And that's all I'm saying, is I would rather it get above that sort of level before I get into it, because, yeah, I might be losing or not getting that 4% or 5% out of it, but at least I know it's definitely going up. So that's really what I would be looking at it. But I don't know about you, but right now I'd just be sitting on the fence, I think.
Okay. Our next question is from Walter. Can you guys have a look at RIO Group? The stock is down around 30% from the all-time high. I'm starting to get excited about some profit opportunities. I've noticed, looking at the history of the stock, that there's a pattern where the stock went down 27% in 2015, 30% in 2016, 26% in 2018 and 47% in 2020 with COVID. He's been watching the show. I don't see any entry opportunities at the moment, but I'd like your opinion about where the stock is heading from now. Many thanks. Thanks very much, Walter. All right, Walter, let's have a look at that.
RIO Group.
Okay, it's had a great run, but has that pullback finished? That's the big question, isn't it? It doesn't look clear
My guess
at this
is
point.
no.
Yes, especially with the move this week, it's really unclear. So, okay, well, it might have pulled back 30-odd%. The problem is the stock could go, any stock, even if it's had a sort of a pattern of doing things, could break that at some point.
Well, there's your recent low, 123.70. That one there last week, 124, and then so far this week we've got 124.11. So, and closing lower, so it's reversed last week's.
Volume seems to be dropping as well.
Yeah, so it's interesting at the moment, isn't it? But I think it's a bit early.
Bit early. I think I'd agree.
But it's
with you
great
on
he
that.
looked at those falls over roughly every 2 years. There were falls in
Fantastic.
the stock. So it's great that you're noticing things like that. But I think it's probably a little bit earlier, because I think we may see a bit bigger fall on this one.
All right.
Okay, sorry, it's my question. Sorry, I should be a little bit more observant here. We've now got a question from Boris, who says, "Hi, Dale and Janine, I'm looking at PSC and have several observations. I would like your opinion on, so I think it has just started a new leg up from a signal on the 19th of April. Now, is that confirmed already or too early to say? Is the fact that the share price stayed still when many went down a sign of strength to confirm the above? My plan was thinking buy now with a stop loss at 86 cents, buying for short-term time frame. Good strategy. Cheers, Boris." So he's asking if it's a good strategy. Okay.
Well, I think it looks interesting. So buying now is really his decision, isn't it? You've really got to decide what your rules are and the reason for entering the stock. It looks like it's taken off through that peak there in the last couple of weeks, but then turned back again. So it's showing that it's a bit of hesitancy to get above it. But if it took off above that, you'd think that it has the potential to keep going. But I think the stop loss is reasonable.
I think everything's reasonable at the moment. I think, it did hold up while the market fell away last week, so that is a good sign, so I would agree with that. I don't have much of a problem with what he talked about.
Great.
Maybe he should be doing the show. What do you reckon?
You're beautiful. Okay. Our next email is from Fuge, is it?
I think that's how I would say it, Fuge.
"Hi, Dale and Janine. I enjoy your show. It is educational and informative. I'm self-funded retiree. A while back I bought EBND with a view to a regular dividend. Whilst I'm still receiving the dividends, the stock price is continuing to fall significantly. Can you please explain why it is falling and its outlook in the 1 to 2 year time frame? Thanks, Fuge." All right. Oh my goodness, look at it.
This looks like a train wreck, doesn't it?
Doesn't it?
Looks
And
like
it's
a train
Van
wreck.
Eyck.
And it's a Van Eyck one, and it's emerging
problem is
opportunities.
investors buy into these ETFs thinking that they're secure and they're fine and they're better than stocks, but not necessarily. You still have
What
to
is
treat it
emerging
like a
income
stock.
active? What is that? I haven't looked into
I haven't looked
into it at all. So it'd be interesting to see. I mean, he's bought into it and it's been falling away and it's continuing to fall away. But the idea was to get income from it, that's what he's saying, as a retiree. So, but you've still got, when you've got an ETF, you're getting this capital loss at the same time.
Yeah, so how can you stomach that?
And how do you stomach that? And this is really why we even say with ETFs. So whilst it's good he's gone into a different ETF, not just an index ETF, he's gone into an emerging income opportunities, obviously, to get income. We still have to predict downside.
Yeah, so is it possible? I mean, I haven't looked into this one, but
No, neither have I.
Would you? I don't know if it's high risk. It might be low risk. I don't know. But the fact that it's moved as far as it has, let's just have a look.
That's a massive move down.
I'll take it from the top here. It's 20%.
Yeah, it's
so
huge.
that's not low risk, is it?
No, it's definitely not low risk. It's a stock that's falling away. Now, he's bought into it. If I remember on his thing here, he says, blah, blah, blah. He said, I think it has started a new leg up from a single on the 19th of April. Well, that's the 15th
falling.
of April. That's in there. So I'm not sure how he's picked that up because I can't see any leg up from anything there. To me, it just looks like it's bearish right now, and there's further downside to go. I mean, unless you can find something there that would really change our mind on that.
No, nothing.
Because it doesn't have a lot of history on this at the moment, because you're looking at this whole history. And for most of the time, outside of this period, it's just been bearish. So it's been really bearish since, back in 2020. Really hasn't been there.
Yeah, look, maybe other people have had experiences with ETFs that they want to talk to us about as well.
Yeah.
Good to chat with people and see what's happening.
Well, it is, and it is. So what do we advise Boris to do? He's got this, he's down from what, he doesn't really say how much he's down.
We can't give personal financial advice. He's got to make his own decision about this, but
he can look in the mirror and give it to himself.
It's continuing to fall. I mean, if you were holding this, if it didn't turn around in the next week or two, you'd probably just get out of it, wouldn't you?
Well, besides the fact that both you and I would have been out of this months and months and months ago, or last year sometime, early last year.
Okay,
by the way.
I'll come back to that question I asked you the other week. If somebody gave it to you,
I would manage my exit. I would be my mind would be on exiting the stock
day to day,
and it would be a day-to-day proposition. And as it kept moving up steps, I'd stay with it. But if it started to take a down step, I'd be exiting. That's what I'd be doing. And it's simply because especially if you can't, as a retiree, if you can't get more money, you need to protect capital. Number one cost. Now, it's a Van Eyck thing. So, you can understand Boris feeling quite comfortable with that because it's Van Eyck. But it just shows everybody that even the top fund managers or these top managers around the world do have things that do underperform, and why we need to have exit strategies on things, especially when you're a retiree who's not necessarily in a position to earn a lot more money.
Yeah.
So we need to protect our capital at number one cost rather than just go, okay, we can get income, because there are so many stocks you can get great incomes from, and there are other ETFs you can get good incomes from. We just, while they're going down, get out of them. If they move up, then we're fine.
Yep, that's really good. All right, we have another caller, and it's Matt on the line. How are you this evening, Matt?
Hi, hello, Dale and Janine. It's Matt speaking. I'm calling from New South Wales, Paris.
Oh, you got in early. I didn't even have to ask you. You've been watching this show for a bit, haven't you?
Yeah.
Very good.
I really appreciate your idea for the past of shows. I really enjoy it. Can I ask about one stock? It's called CCZ.
Definitely. And look,
Yep.
why is that stock interesting to you? What's your question?
Cash converters?
Well, because I jumped in at 4 cents last year sometime with the idea that copper is in high demand and this company has lots of mining sites going on, but it's not in production yet. But it turned out a falling knife. I don't know, or I'm seeking your opinion. How long it's going to be turned around, and how low it's going to be dropped.
Was this a short-term proposition for you?
I'm quite kind of speculative.
When you
Really
say you're
depends on how
speculative,
much
are you
money.
saying that you do tend to chase a lot of the more volatile, illiquid type shares?
I think I have lots of options. If they have a quick turning around, yes, I will start it.
Yep.
If there's going to be maybe in the long run over the next, yes, I will hold it.
So if they start moving up, you're saying you'll hold it?
Yeah.
And
yes,
if
I
they
will
start
hold it.
falling away, you let it go?
Well, still depends on how.
That's a no.
Yeah.
That's a no. You really need to have stop losses on this, mate. You've lost about half his money at the moment, so.
Yeah.
Yeah, but
Look,
thank you for calling in.
I think it's a really good question, Matt, and I really thank you for that, because there are a lot of people out there who look to buy into the small stocks, and they can be very, very risky. And the challenge is that you could sell out and then it could go back up, sure. But if they keep falling, they can fall, 30, 40, 50%, and that's a real huge risk. So, look, I think the best way that we can help Matt right at this point is to give him our view on where we see it going in the short term, because it's all good with the benefit of hindsight, isn't it? You know.
Yeah, but if you're trading these stocks, you have to have not just an upside potential, you have to have a downside risk calculated and work out your exit strategy.
Yep.
Otherwise, you're just gambling with your money.
Look, I'd have to say that.
So I don't
in the
want to
past,
be rude to him, but I mean, you know what I mean. It's like
Yeah, I know,
you can't just think, oh, I'm going to make a lot of money. You have to have an exit strategy, and he doesn't have one.
I think when I look at this in the last few weeks, it's really just slowed down.
Yeah.
So there's a chance it might actually stabilise, and we might see it try to move back up, but it just depends on what happens in relation to this trough or this low here, this last one that was in March, early March.
If it went through that, I'd just be exiting. But I don't want to give him false hope too, you know, because right now it's not telling us anything at the moment, really, that's going to go up or down.
True.
And he seems hesitant to want to sell it. So I would say if it went through that low, I'd sell it.
If you were holding it.
Or I'd manage myself out of it. That's same as that other stock. But but I mean, it takes.
Well, I think that your best advice
it's great
is
that he rang in.
have a stop loss on a stock like this.
Yeah.
People think that they could just buy these sort of stocks and put them in the bottom drawer, don't they?
They do, and it doesn't work that way. It really doesn't work that way. But thank you for ringing in. Like it does. Sometimes I know how gutsy it can, or how much it can take for somebody to ring in and put themselves up to Janine herself. So please, thank you for calling in and talking about that stock. But as I said, you know, I'd suggest you manage yourself getting out of that stock. But let's move on to our next email, and this is from Stephen, who says, "Hi Dale and Janine, can you please take a look at Worley Limited? I do not own this stock, and given the recent adjustments in the All Ordinaries market, I think I should be waiting for further confirmation that this long-term growth will continue to before entering. What do you think of Worley? Thank you in advance and keep up the great work educating investors. Regards, Steve." Great question.
Excellent. Thanks very much, Steve.
I like this stock.
Yeah, we've talked about this on the show before. Long term, we think it's bullish and we like it. In the short term, it's just coming back at the moment. It may have a little bit further to go before it then moves up again, but long term, it looks good. That's really all there is to say about it.
Geez, that was short and sweet, wasn't it?
It was.
It's like me. I'm short and sweet. No, you don't like that, do you? But I do like this stock, and I think if BHP, RIO and the other mining companies start to get some really good momentum going, I think this one will benefit
the
from all of
services
that.
companies.
Yeah, it's the services. I think it'll do really, really well.
They're into all sorts of things too, Worley.
They are.
Alternative energy type areas.
Yeah, great pick, Steve. Well done for that. And I think you're doing well on this stock, or you will do well on this stock. But that is our thoughts on Worley Parsons. Now, Janine, I know you love hearing the great stories and nice comments from our viewers on how they are doing, and I definitely know that we really would love to hear more. So if you are sitting there watching the show thinking, geez, I'd love to let the team know how well I'm doing from watching the show, then reach out to us and share your experience. Now, whether you're watching on YouTube or on Facebook, then please take the time to comment below in the comment section. If you are listening to us on a podcast, please leave a 5-star review on whichever podcasting app you happen to be listening on.
You can also reach out to us through Twitter. Our Twitter handle is @WealthWithin, or you can simply hashtag the Australian Stock Market Show.
If you've enjoyed tonight's show, give us a big thumbs up. That means click the like button underneath the video to let Janine and myself know that you've enjoyed the show.
If you called into the show and missed out on us answering your question, then watch our show next Tuesday between 7 and 8 p.m, as we'd love to chat with you. If you're not able to watch live, you can also email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line. Is that enough of an emphasis?
You do. We also really appreciate your support for what we share each and every week. You can show your support by subscribing to our channel. So if you've not done so yet, hit that subscribe button now.
All right, well, that is it for tonight's show, and we do hope you enjoyed what we presented tonight. We've also enjoyed receiving all of your emails, and thank you to those who called into the show. We love the opportunity to chat with you personally, and no, I'm not bringing this voice next week.
All right, as always, thank you for joining us, and we hope you have a fantastic week. But for now, goodbye, good luck, and good trading.
Good night.